Hello, everyone. Welcome to Money Hour Radio, a show where we try to help you grow your money, cut your taxes, and have a beautiful retirement. I am one of your co-hosts, Ben Barzideh. Of course, I have my trusty, esteemed co-host with me, Matt Nadeau.
Hey, everybody.
We are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located locally right here in Barrington and serving the greater Chicagoland area. And we are fiduciaries. And as an independent, family-owned firm, we truly have the freedom to focus solely on your interests, not some corporations or those shady private equity companies that are buying everything these days.
And of course, just always want to take a moment, say hi to all of our clients who are listening today. We appreciate the trust that each of you have placed in us and publicly want to declare that we love every single one of you.
Absolutely.
Yeah, we have a great show today. We really want to dive into a couple big topics. Obviously, one of the biggest topics we've been hitting on for weeks is the whole conflict in Iran. Well, I think the Strait of Hormuz is opened. I think the war is over.
That was fast.
So we're back in the market. And if data changes, we change. And we're going to talk about not only are we back, but we're going to talk about some other reasons we think the market could continue to rally moving forward. And then later in the show, we're going to talk about one of these highly unknown but powerful benefits that are available for Social Security. And it's if you're a surviving spouse. And we're going to talk about how those benefits work, ways to maximize it. So it's a really good topic. You don't want to miss it.
But before we start, we encourage you to subscribe to our YouTube channel on moneyhourradio.com, where you can view this week's episode along with previous ones. So like and subscribe. And guess what? Today, Matt, we hit 15,000 subscribers.
All right.
Yeah.
We're getting there.
We're not millions yet, but hey, it's coming along.
I mean, my neighbor runs an old bike video shop. He's got a shop with old bikes and videos. He's at 30,000. So come on, people, help us out.
Well, that's the goal we've had, is getting to what your neighbor is doing. So we're like halfway there.
Right. We'll get there, guys, with all of your support.
No doubt. Also, please sign up to our weekly economic newsletter. It's amazing. It's so good. It's called the 5-Minute Market Brief. It lets you know exactly what we're seeing, what we're analyzing, our thoughts on the market that week. And while you are on BN Wealth, please follow us on our social media as well, like our Facebook and Instagram pages. All right, Matt, we're back in the market. Good stuff happening. Let's get into it.
Yeah. And before I dive into this, when we say we're back in the market for our clients, if you're just listening to us, be careful doing anything just off of our opinions. You want to make sure your situation is reviewed and analyzed, and you don't listen to just two talking heads, even though I think we're experts. Make sure you don't just jump out there trying to do this on your own. But it's been a wild week. We're back in the market. We actually got back in earlier this week, and we were out for about 3 weeks. And we're always thankful when the storm in the markets didn't develop into something bigger than what ended up happening. But there were a lot of issues, and we wanted to be cautious for a little while. And on last week's show, we talked about how despite being out of the market, there were starting to be some positive developments, especially with the war in the Middle East, and our buy and sell indicators were close to a buy and getting us back into the market. Typically what we were looking for is a little more follow through in the market, a little more follow through in the data, and we got all of it this week.
Sure did. So what are the positive developments that make us feel bullish right now? Because we're very bullish. Well, first and foremost, obviously the situation with the war in the Middle East, it seemed to have calmed down a lot. I mean, just in a couple of weeks, the ceasefire is holding up. The U.S. is now in control of the Strait of Hormuz. In fact, today, which is Friday, Iran basically came out and said it's completely open again. So hopefully that should help bring oil prices down over the next few weeks and months.
Like I was saying, we're all celebrating. The war's over. It's over.
It looks like it is. I mean,
it's getting there.
We'll see. But the situation with the war settling down as the reason the market is rallying is the low-hanging fruit. It helps, but there are some other big important things that are happening right now that are making the market go up, and things you may not be aware of. Well, guess what? We're going to bring him to you. So, what are the positive things happening right now that we feel is helping this market rally? Well, first of all, inflation concerns are cooling. Economically, we had a solid Empire State Manufacturing headline this week that helped tamp down recession fears, while cooler than feared import export prices helped ease the near term inflation fears.
Yeah, inflation's going to be huge. So we need to keep seeing good numbers like that. The other big thing we always have been talking about is AI enthusiasm. And we're seeing a few signs that the enthusiasm may be coming back. So, for example, we saw Facebook or Meta and Broadcom AI chip come up with an AI chip deal. So, Meta Platforms and Broadcom, they announced this multi-year, multi-billion-dollar expansion of their strategic partnership to work together to develop some AI chips for Meta's AI infrastructure. And that deal runs all the way through 2029. And that is a big push for tech, and tech means driving the markets higher as well.
No doubt. And then here's the big one that you may not have heard of. But guess what? We are having a very strong earnings season. And that's huge. I think that sometimes people may forget, Matt, how important earnings are for the market.
What are those?
At the end of the day, it's the most important factor. You're investing in companies. So are those companies making money or not? Well, guess what? So far, it has been a fantastic earnings season. And it's been broad, with over 70% of the companies expecting to beat their earnings estimate.
Yeah, and we've seen a few big winners, like financial has been a really big winner. You know, when we're looking at Morgan Stanley and Bank of America, both reported solid first quarter results, and then they echoed strong earnings that were posted by other companies in the financial sector. So that's helping to ease some of the angst brought on by the financial sector from that issue we've been talking about with this private credit concerns. So that's help offsetting one of those big issues that we were worried about. And what we've seen is, for example, trading desks out there for their institutional and investment trading, it's crushed it because of market volatility, a lot of trades. The net interest income is strong, higher interest rates. That's really helping the margins for these financial companies. And investment banking is starting to see a rebound. We're seeing these deals, this activity starting to pick up, and all of those are positive.
So far, financials was the clear winner. But guess what? Number two, the second best earnings sector right now is tech. So tech has been coming back in a very strong way. So AI-driven demand, it still remains huge. And cloud and data center spending, it's only accelerating. And then semiconductor demand is still booming. And speaking of that, one of the notable highlights this week, Taiwan Semiconductor Manufacturing Company, they had a revenue year over year increase of 35%, which is huge. And then the next best sector, guess what? Is energy. So with oil prices going
no surprise.
up, no doubt. So not all the results are out yet, but macro tailwinds are very strong. And so oil going up as much as it did, it's boosting profitability. And even though it's coming down, it's still higher than it was a few months ago, and it'll probably stay high for a little bit longer before it completely comes down. So strong cash flows expected due to these higher oil prices.
Yeah, and bottom line, I mean, the outlook clearly improved in the market over the past couple of weeks. And that's why, as we continue to say, we monitor these events in the market, in the economy, every single day. And when the data changes, we're nimble. We will move with the trend as things change. So, all this hurrah, positive, one thing that's still concerning is the market has started to have this recovery, but treasury yields, the bond market, hasn't really changed much and they haven't come down. The 10-year yield is about 30 basis points higher than it was before the war. And that really is saying that people are still concerned about these inflation metrics running hot, especially once some of these higher oil prices over the past few weeks work themselves into inflation. But as long as the market thinks this is transient, it'll be temporary, which it is saying right now, at least the market thinks this, I think it'll look past that issue.
So we are happy that the market's back. It's recovering nicely. Like I said, we're fully back in 100% stock in many of our advanced and protect actively managed portfolios that we manage for our clients. And then additionally, the target areas in the market that we're invested in right now are the ones that, based on our research, we feel are the better, more optimum sectors and categories of the market to be invested in right now, areas with better momentum and strength. So that's where we are in right now. So, but we do monitor our investments. Things can change, and if the data changes, so do we. So don't settle for cookie cutter portfolios. If you want your money managed like that with an active approach, give us a call. Schedule an appointment. We'd be happy to sit down with you, look over your investments, look over your entire financial picture. If we can help you, that's great. If we can't, that's okay too. So if our investment philosophy resonates with you and you want to have your money managed like that, please reach out. To explore becoming a client, you can call us at 847-780-2980 or go to bnwealth.com. All right, don't go anywhere, because as soon as we come back, we're going to talk about Social Security survivor benefits.
Welcome back. Thank you for tuning in. This is Money Hour Radio. It's a show where we try and help you grow your money, help you pay less taxes, and have a beautiful retirement. I'm one of your hosts, Matt Nadeau. I have with me my esteemed co-host. He's always my sidekick here. Can't do the show without him, Ben Barzideh.
Hello, everyone.
And we're both founding partners and wealth managers at Barzideh and Nadeau Wealth Management. It's a comprehensive financial planning firm that's independent and local right here in Barrington. And we're here to serve the greater Chicagoland area.
And guess what? We're not private equity either, which is
That's right.
good. It's a family-owned business. Before we start, please like and subscribe to our YouTube channel on moneyhourradio.com, where you can see this week's episode along with our previous ones. And then also, please sign up for our weekly economic commentary. It's called the 5-Minute Market Brief. You can go to bnwealth.com and sign up for that. And it's a weekly report that lets you know what we're seeing, what we're analyzing in the market. A lot of times in that report, we'll indicate if we got out of the market or if we're getting back into the market, or sometimes when one of our indicators changes. So go to bnwealth.com and sign up for that. All right. Now, the topic at hand, our financial planning topic of today is, how do Social Security survivor benefits work? And survivor benefits are a crucial component of the U.S. Social Security system, and they're designed to provide financial support to family members of a deceased worker who had paid into the system. And these benefits can help replace lost income. They can offer stability during what can obviously be a very difficult time when someone passes. And understanding how survivor benefits work, along with the strategies to maximize them and potential pitfalls to avoid, is essential for effective financial planning. And because many people don't understand these rules, surviving spouses may be leaving money on the table and not getting what is rightfully owed to them by Social Security.
All right, let's talk about what this is. So survivor benefits are available to certain family members of a deceased individual who had earned sufficient work credits under Social Security. So typically these eligible recipients that we see are, the big one is a surviving spouse. It can also be a divorced spouse under certain conditions. It can be unmarried children who are under the age of 18, or I think up to age 19 if they're still in high school. And then in some cases, some dependent parents. So the amount of the benefit is really based off of the deceased worker's earnings record. So the more that the actual worker paid into Social Security over their lifetime, the higher that this survivor benefit could be for one of these eligible recipients.
So a surviving spouse can actually receive benefits as early as age 60, or even as early as age 50 if disabled. But here's the thing: do not rush to claim at 60 unless you absolutely need to. And that's because claiming before full retirement age, which is about 67 for most people, results in reduced monthly payments. If the surviving spouse waits until full retirement age, they can receive 100% of the deceased worker's benefit. And to put some numbers into play here, in contrast, claiming early may reduce the Social Security benefit to as little as 71.5% of the full amount. So you basically take almost a 30% hit. For those caring for a child under age 16, or you have a disabled child, benefits can begin at any age, though these are subject to different rules and limits. Now, to maximize survivor benefits, timing is one of the most crucial factors. Delaying benefits until full retirement age ensures the highest possible monthly benefit payment amount.
Yeah, and you're right. Timing's critical, Ben, but there may be times it's the right thing to take it as early as possible because you want to coordinate strategies, which leads me to this next point, which is a huge, huge deal. Only surviving spouses have this option, which is you can switch between benefits. So let me give you an example. Let's say you're a widow or a widower. You can actually choose to claim the survivor benefits, start collecting a check from Social Security based off of your spouse who passed away, but you can have your own benefits be delayed, letting them build up and continue to grow through these delayed retirement credits. And this flexibility allows you to then switch to your own later when potentially your own Social Security gets higher. And this flexibility can significantly increase your total lifetime benefits if you do it strategically. So, another important consideration is this coordination of benefits for couples. Higher earning spouses may choose to delay claiming their own Social Security benefits as long as possible, which increases not only their own retirement benefit while they're alive, but after their passing, their survivor benefit is also higher that can go to their spouse. And this is extremely valuable because survivor benefits are based off of the amount that the deceased was receiving or entitled to receive at the time of their death.
This is such a big deal. And I want to give you an example of what we're talking about. A very simple example. Let's just say Tom is getting $4,000 a month in Social Security, while his wife Sarah is currently getting $2,000 a month based off of her record. And then all of a sudden, Tom gets hit with that big giant fly swatter in the sky, and he dies. Well, Sarah is obviously sad about Tom passing, but she's a bit less sad when she realizes she can now start getting Tom's $4,000 a month benefit as a survivor. So, big deal. That's why it's so crucial. And we coach people on this that if you can, further delaying your benefits all the way up to age 70 to start not only gives you a higher income stream for the rest of your life, but once you pass, it helps your spouse potentially have that much higher income stream for the rest of their life. So it's very important to coordinate that. But of course, there's always some pitfalls to be aware of. And one common mistake is claiming benefits too early without fully understanding the long-term reduction in monthly payments. And while early claiming may seem appealing in times of immediate financial need, you want to try to avoid it if you can. It can significantly reduce the lifetime total income that you would get, especially for individuals who live longer than average. So if you have longevity in your family, this is something to take into consideration.
Yeah, you got to think about all these pieces. And another thing to really review and look at is there's something called the earnings test or an earnings limit. So let's say if you're a surviving spouse and you want to go claim benefits before you reach full retirement age and you're still working, you could have your benefits temporarily reduced if your income exceeds certain thresholds. And this can really lead to confusion, and maybe you have these unexpected reductions in payments. So if you're working, you really have to think this through. Again, once you hit full retirement age or older than that, it doesn't matter anymore. There's no earnings test at that point. And then another thing you've got to think about is remarriage. That can be a factor that can affect your eligibility. So let's say, generally, if you're a surviving spouse and you remarry before the age of 60 or age 50 if you're disabled, you just lose all the eligibility for that survivor benefit based on your deceased spouse's record. However, remarriage after these ages does not impact eligibility, which is still an important distinction for financial planning. So basically, if you fall back in love, you're like 59, you're like, honey, I love you. I want to marry you. I just got to wait one more year so I can get these survivor benefits.
That's right. Delay the wedding. Make him work for it a little bit longer,
That's right.
right?
That's so romantic.
So, in conclusion, Social Security survivor benefits provide essential financial support, but navigating the rules requires careful planning, of course. And by understanding the timing strategies, eligibility, potential pitfalls that we brought up, such as early claiming or the earnings limits, and then the remarriage rules, that's a big one. So, individuals can make informed decisions that maximize their benefits and ensure greater financial security over the long term.
Yeah. And Ben, one of the big challenges is when people try to do their own social security planning. This is probably going to be the maximum or the biggest pot of money you're going to receive in your retirement is social security for you, your family, your spouse. And a lot of people just willy-nilly go out and just start it too early. They don't think about these strategies. There is software online that people try to do it on their own, but they're not thinking about these coordination strategies, how it plays with your assets, your income, earnings tests, potentially thinking about a survivor benefit in the future. And that's where you need a professional with financial software, high level understanding of these different techniques and coordination strategies. It's stuff that we've done for decades. I remember back in the day, we had even more strategies that they took away from us, but we're still always looking at how to best coordinate your income, your social security with your entire financial plan. And that requires expertise. And it also requires software that you understand how to utilize to coordinate all this together.
It's interesting you say that because if you just go to a Social Security calculator and you put in your specifics, it may shoot out a certain strategy. But guess what? When we do a test, not only do we look at that, but when you look at your other factors, do you have IRAs? Do you have Roths? Do you have brokerage account? What's your tax situation like? There's been times where when we factor all that in, all of a sudden, the best Social Security strategy for that individual changes. It's not what just the Social Security calculator in a vacuum spit out. So it's very important to do a more complete, holistic type of planning, and that's what we can offer you. So as with any financial planning, investments, tax, estate planning, you want to work with qualified professionals who understand these concepts. Usually a good financial planner like us is the quarterback of your plan. We help coordinate with your professionals like your CPA or your attorney. And if you need a good financial planner, someone who puts your interests first, we would be honored if you give us an opportunity to talk with you. Please give us a call if you want to schedule a complimentary consultation. Go to beinwealth.com or call our office at 847-780-2980. All right, we're out of time. God bless you. We'll see you next week.
Take care, everyone.